gold, not only physical, but you can have that with quarterly dividends. Caledonia Mining is doing an excellent job in Zimbabwe. Wonderful good day, ladies and gentlemen, to the corporate update of Caledonia at Commodity TV. Reliable as a Swiss clockwork, Caledonia Mining has been paying quarterly dividends since July 2017. Although we often hear that Zimbabwe is not a good place to invest, Caledonia's success with its blanket mine shows how to do it right. The first quarter was again good, and fiscal 2022 was also successful. This quarter's results are the first to reflect Caledonia's acquisition of the Bilboes Project, which closed on 6 January this year. The near-term actions related to Bilboes are the resumption of oxide mining and the preparation of a revised feasibility study related to the larger sulfide project. Technical issues were encountered with the resumption of oxide mining, but it is hoped that gold mining from the near-surface oxide deposits will be cash neutral and will help the company maintain the operational integrity of Bilboes until the feasibility study is completed. In addition, the waste material that will be hauled away as part of the oxide mining operation is material that should have been hauled away later when work began on the main sulfide project. The blanket mine experienced some technical problems in the first quarter. However, these have been resolved and both April and May went well. It continues to project annual production of 75,000 to 80,000 ounces for blanket in 2023. Gross revenue was $29.4 million, showing lower gold production from blanket. Despite this, there was an EBITDA contribution of $2.25 million. The disappointing contribution was due to lower revenues and higher operating costs at blanket and costs at the Bilboes oxide mine. The blanket mine alone contributed an EBITDA of $11.3 million in the quarter. All-in sustaining costs increased to $1,412 per ounce due to higher costs at the mine and consulting fees incurred in completing the Bilboes acquisition. While this resulted in a loss per share, everything has now been processed. On a positive note, the 12.2 megawatt solar plant was commissioned on 2nd February this year, which already generates slightly more power than expected. This should also help to reduce costs. Deep drilling at Blanket has resumed with the aim of upgrading the inferred resources and identifying new resources which will extend the mine life. The feasibility study for the Bilboes sulfide project is expected to be completed in the first quarter of 2024, with the goal of maximizing value for Caledonia shareholders. We see the Bilboes project as positive for Caledonia Mining's future. Blanket is running smoothly again and they are expanding resources to depths. Another positive is that they have started direct sales of gold from the Blanket mine to a refinery outside Zimbabwe, which reduces country risk. Since listing on the Victoria Falls Stock Exchange and following completion of the Bilboes acquisition, Caledonia has been exploring various options for direct export of its gold. Unrefined gold continues to be refined at Fidelity Gold Refinery, a subsidiary of the Reserve Bank of Zimbabwe, on a toll processing basis to meet the government of Zimbabwe's in-country refining requirements and to provide the Zimbabwean authorities with a complete view of the gold produced and exported by Caledonia. The export of the gold is facilitated by Fidelity as the holder of a gold trading license. The refined gold held by Fidelity is exported to a refinery outside Zimbabwe. The foreign refinery receiving the gold performs the final refining process and sells the gold on behalf of Caledonia. Caledonia receives the proceeds from the gold sales directly into its bank account in Zimbabwe within a few days of delivery to the final refinery. This arrangement in respect of production from the Blanket mine meets the current requirements to pay a 5% royalty and ensures that Blanket continues to receive 75% of its revenue in US dollars and the remainder in local currency. The chart also shows a bottom here and an initial price target of $17 per share. The annual dividend is a solid 4.5 to 4.7%. With a further increase in the gold price as well as a production expansion, we can also imagine the old price high of $26 again. Please note the disclaimer superimposed now. The stock discussed is part of the SRC Mining Special Situation Certificate, and of course I'm a shareholder in this wonderful quarterly dividend wonder. Thanks for watching us and bye-bye from Switzerland.